What's going on, you guys? This is Aaron FOREX Scott, part of the Winner Circle. I'm shooting this video today. Today is June the 11th, 2018. I was shooting this video to basically go over a pair that I'll be watching for the week, which is GBPJPY. So if you're a part of the team, this is one of the main pairs that we use for our key strategy for our signals. But we will be also watching this pair throughout the week to see if we can catch some major pips on a potential fall in GBPJPY. I'm going to go over the chart right now. We're looking at a weekly chart, but I'm going to go over some basics. That way we can get a better understanding on the direction of GBPJPY and where it's at in the market. I know a lot of the people that are part of the team may be new. So if some of this information is foreign to you, it is okay. That is exactly why you are part of the Winner Circle. That is why you connected to the leading source of education, so that you can learn and understand the language of the foreign exchange market. Once you understand this foreign language, when the chart starts speaking to you, you will be able to understand and you will be able to interpret what it's telling you, so that you can potentially make some money based off of your investments inside of the foreign exchange market. Now I'm going to go over some key points, which is support and resistance, which is some of these lines that you may see on the chart, and also some trend lines. This is a trend channel here. This is a trend line here off of a higher time frame, but I'm gonna kind of break it down by time frame by time frame, so that you can see exactly why I marked up the charts the way I did and why I'm looking for a sell this week in GBPJPY. Right now, we're looking at the weekly chart, and if I zoom in, you can see the overall status of GBPJPY. This is the lifetime status of GBPJPY. When it first started way back in 2002, all the way up until today's date. This is the flow of GBPJPY. Now, when you catch the flow of GBPJPY, or you look at a higher time frame, of course, you want to find some highs, you want to find some lows, you want to find some significant price ranges. That way, you know when price gets to that price range, you know there is going to be a reaction, whether it's support, which is the floor, or whether it's resistance, which is the ceiling. And when you find the floor and the ceiling, a lot of the times when price gets to that point, it tends to reverse or turn around or go in a different direction based on that price point. So as you can see, this green line at the top, and I did a video last week based on GBPJPY. We predicted a sale last week on GBPJPY. I forget what day it was. I believe it may have been Wednesday or Tuesday or something like that. And our predictions was right. We caught over 100 pips on the fall, and I'm going to show you where that was as well. But right now, as you can see, this is the very high point. This is the ultimate high for GBPJPY, so I marked that off at the very top. It's nowhere near up here. It's not going to be up here anytime soon. And this is the low, this very low, the ultimate low of GBPJPY. And I also marked off a midpoint on the weekly chart. These green lines is based off the weekly chart. These red lines are basically based off of the daily or the hourly chart, because it's currently where we're at right now in the price. So now once I have my price zone set up on a higher time frame, I will go to a lower time frame, maybe the daily. And when I go to the daily chart, we're going to go over why I have this trend channel. A trend channel is basically based off of an impulse, and then it pushes into a flag. This here, this push down, is basically an impulse move all the way down. Being that it is a higher time frame, it took a while for it to get from the ultimate high to this point right here, but it is an impulse. It never really turned its direction until it moved here. This was an impulse move up. And once you have a high, which is here, a higher high, which is here, and then another high, a higher high here, then you know that you are in a flag pattern. And usually when you have an impulse move down and then you get a flag pattern up, normally you will get another impulse move down. And this is for all time frames. You can do this on a weekly, the daily, the 4 hour, the hour, the 15 minute, the 5 minute. If you have an impulse move and then you have a flag pattern similar to this, where you have a trend line drawn at the bottom, which connects all of your lows or most of your lows. Some of your lows may not connect, but the more lows that you can connect with your trend line, the more stable your trend line can be. And it's the same thing for the top. The more highs that you connect on your trend line at the top, the more stable it can be. So I'm utilizing this channel, and as you can see, it's been bouncing up and down throughout the channel, and it's been doing this for a couple of months now. And I noticed once we got to this area that it started to consolidate. I'm gonna zoom in so we can see it a little bit better. When we got around this area here, it started to consolidate. These lines, these boxes are more so zone areas. These are actual lines, and normally when you have a support and resistance line, sometimes it might not be the exact point. Sometimes you may have to create actual zones. That way you know if it's in the zone, then you have a potential setup coming. So I set up some zones, which is 3 zones here, and I also have some support and resistance lines. Now, when this trend line was forming, I noticed that we had a potential head and shoulder pattern. A head and shoulder pattern is basically you have a shoulder, which is here, then you'll have a head, which is here, then you have another shoulder, which is here. When you get a head and shoulder pattern based on this, at the top, you are looking for a sell. And what I found was once the trend line broke here, I'm gonna go to the hour chart so we can see it in real time. Oh, not that close. Let's go to the hour chart so we can see it in real time. Once the trend line was broken, which was here, we were looking for a potential sell in the market. And in order to get a good position when you have a trend line break is to wait for a pullback. And once you get a pullback, and if that pullback does not go above your trend line, or if it reacts to your support or your resistance as a ceiling, then you know if it's not going to break through, that you can get ahead and get in for a sell. So what happened was we had your head and shoulders pattern. This is the actual shoulder here. We had a reaction to the zone. It came down, came back up, retested the zone, came down, came back up, retested the zone again here. Let me zoom in so we can see it a little bit more clear. There we go. As you can see, this wick came up, tested the zone near the trend line, and it pushed down. And we got an impulse move down. This is what you call an impulse move. When you got a series of large candles pushing through either a zone, a support and resistance line, or a trend line. And as you can see in this particular moment, this impulse broke through this red line, which was at one time the bottom here. Not only did it break through that red line, it broke through the trend line, and it broke all the way through this support and resistance line and the entire zone. So when we got this impulse move, this gives us an indication that this former trend, which was at one time an upwards trend channel, is now in a position of changing its direction. So once we get that first indication, that's our first confirmation that we may be looking for a sell. And once it broke through, like I said, when you get an impulse move down or an impulse move up, you have to wait for a retest. And in this particular instance, it came up to retest in the zone, but not only the zone, notice that it retested at this exact line. I drew these lines weeks ago, and it's still resisting and it's still reacting to this line. So this is a very important price line, and as you can see, when it got there, it never broke through. It tried to come back up, it retested, it hit it once, it hit it twice, it consolidated right there at the line, it dropped again. That was our first indication. You could have got in on this fall, but if you had got in on this fall, you'll notice it jumped right back up. It came right back up to that line to test again. The market always gives you multiple chances to get in the market. That's called the retest. It gives you a second chance. It gave you a second chance, came down, it gave you a third chance. 9 times out of 10 at this third chance is when you jump in for a sale. And if you had jumped in for a sale here and rode it all the way down, let's see, you would have caught from this very candle here all the way down. It's over 300 pips. 300 pips. And that might have took you about 2 or 3 days, but that would have been a 300 pip move. Now, after that move, after a major move like that, because it started up here and it continued to go down, after that move, when you get an impulse move like that, a lot of the times, the next thing to come is a pullback. And that's exactly what happened. We have a pullback happening right here. This was probably Friday and on into Sunday, because Sunday was still going up. I believe we have Sunday here. All this is Sunday right here. So we had a pullback going up. And once I noticed that there was a trend coming from the low, you have a low here, you have a higher low here. What I did was I put another trend line to connect those lows. That way I know I can wait for the next time to jump in for a sell, because this is an overall sell. If I look at it from a higher time frame, if I look at it on a daily time frame, or maybe not even a daily, let's look at it at a weekly time frame, you'll notice that this potential sell, because this is an impulse move down, this is the flag, and if we're looking for another impulse move down, this potential sell can last from here all the way back down to here, which was the previous low, and it's almost 2,000 pips. So when you have a potential sell setup on a higher time frame, it is best to try to find sells in the lower time frame. So now that we have that trend line broken here, we have a trend line broken here, so we know that the market is in a position of changing the direction. It was going up for a while, now we're in a position of a change of direction, so now we're looking for a sell. Our potential margin is almost 2,000 pips on a higher time frame. Now that's for some of you guys that like to swing trade and have the patience of holding trades for weeks at a time or even months at a time. GBPJPY is a good pair to look at for a sell, a potential sell. Now, we go back to the lower time frame so we can see where is a good point to enter the market. And that is why I drew this trend line here. This is a trend line based on the hour market. It's connected here on this low. It connected here on this low. It reacted again there on that low. It reacted again. And then we have another break on the hour trend line here. Just like we had a break on the daily trend line, now we have a break on our hour trend line. And once you get the break, you don't trade the break. You don't trade as soon as it breaks the trend line. If you do that, trying to get the highest possible position, trust me from experience, I've tried it as well, trying to get the highest. But the best thing to do is wait for confirmation. You would have jumped in this trade, you would have got a few pips, and you could have closed out or moved your stop loss and below your entry. That way you could have had a risk-free trade. But as you can see, if you had entered here, you would have fell and draw down, and you would have ended up in the negative, probably hit your stop loss or blew your account, depending on how much your account size was. So what you have to do is, after you find the break, which what we had, we wait for the pullback. The pullback happened, and look where it reacted to. It stopped here for a moment at this line. It's in our zone, and it came all the way up to touch the trend line based off of the daily chart. And once it got here, not only was it at the trend line, but it is also at this support and resistance line. If you can follow this line all the way over, you can see that it touched that resistance line. And when you get multiple touches where it touches your trend line and your support or resistance line at the same time, if you notice, this is another trend line, so it's all in this area. This is an energy point right here. And what it did was it reacted, it fell, and now we have another pullback after the impulse. So what you do is you draw your trend line and we wait. We wait. And this is what we're waiting for. We're waiting for another break. When we get this break, we jump in for the sale, and we can ride it as long as we want to. As long as it never comes back above this trend line, we can ride this GBPJPY for 2,000 pips. So hopefully this video was help to you. Hopefully you're watching it. If you're a part of the winner circle, let's have another successful week. If you're not a part of the winner circle, get in contact with me or anybody in the winner circle so that we can help you earn while you learn Forex. See you in the